Hey everyone, welcome back to Corporate Decoder. Today we're diving into a company that seems to be juggling more resolutions than your average New Year's party. Before we get started, if you are into getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below. We are looking at a filing from Luxfer Holdings, and it's an 8K form, which is basically a snapshot of major events. In this case, it's all about the results of their annual general meeting, or AGM, a yearly gathering where shareholders get to vote on important company matters. Think of it like a school election, but with much bigger stakes. The main event happened on June 5, 2025. This is where shareholders voted on a bunch of important decisions for the company. This report tells us exactly how those votes went down. Luxfer has what are called ordinary shares, which are just regular shares of stock, each with a face value of 50 British pence. The ticker symbol is LXFR and it is traded on the New York Stock Exchange. Now let's get into what exactly the shareholders voted on. At this meeting, a significant amount of the company's shares were represented, over 84%. They voted on 14 different resolutions, which is like a list of proposals or decisions. First up were the director elections. Shareholders voted to elect 6 individuals to serve on the board for 1-year terms. These are the people who will be helping to steer the company for the coming year. Let's quickly run down the names. Andy Butcher, Patrick Mullen, Richard Hipple, Clive Snowden, Sylvia Stein, and Lisa Trimberger. They all got the nod from the shareholders. The numbers tell a straightforward story. Each nominee secured overwhelming support, with 4 votes far outnumbering against votes. For example, Andy Butcher got over 21 million votes in favour, compared to about 72,000 against. Next, shareholders had to approve the directors' remuneration report. This report details how much the company's directors were paid. Turns out shareholders approved it. Again, the support was pretty strong, over 21 million votes for and around 379,000 against. Then there was a vote on executive compensation, essentially asking if shareholders thought the top executives were paid fairly, and guess what? It was approved. We see a very similar number here, a little over 21 million votes in favour versus 380,000 against. Here's where things get interesting. Shareholders voted on how often they should get to voice their opinion on executive pay, which is referred to as a say-on-pay vote. The majority, almost 21 million, voted to have this vote every year. Compare that to around 760,000 who wanted it every 3 years. The company asked shareholders to ratify or officially approve the reappointment of PricewaterhouseCoopers L independent auditor. Auditors are important. They double check the books and make sure everything looks right. Looks like everyone was on board, over 22 million votes for, compared to about 632,000 against. Shareholders also gave the thumbs up to letting the audit committee decide how much to pay PricewaterhouseCoopers. This is pretty standard practice. The vote here was almost unanimous, a little over 23 million in favour with only a few thousand against. This resolution asked for the board of directors to have the authority to issue new shares. Issuing more shares can raise money for the company, but it can also dilute the value of existing shares, so it's an important power. The vote came in at just over 22 million in favour with around 731,000 voting against. This one's a bit more technical. It's about allowing the board to issue shares or sell shares they already hold without giving existing shareholders the first chance to buy them. These are preemption rights designed to protect shareholders. It passed, getting a little over 23 million votes for and only about 50,000 against. Finally, shareholders voted to authorize the board to buy back the company's own shares. Share buybacks can increase the value of the remaining shares because there are fewer of them. The important detail is they can only buy back up to 10% of the outstanding shares. This one got almost universal approval, coming in at a little over 23 million votes for and only a few thousand against. They can do this until June 5, 2030. That wraps up the details from the meeting. So what can we take away from all this? Well, first off, it looks like the management and the board are in pretty good alignment. Most of the votes were overwhelmingly in favour of the resolutions put forward. The vote on say-on-pay frequency shows that shareholders want to have a regular check-in on executive compensation, which is a sign of good corporate governance. Approving the board's ability to issue new shares and buy back old ones gives them financial flexibility, but also puts more responsibility on them to use those powers wisely. Overall, based on the votes at the annual meeting, Luxfer Holdings seems to be be on a steady course, but it's always good to keep an eye on how those decisions translate into real-world results. Alright, that's our breakdown of Luxfer Holdings' latest filing. What's your take on these votes and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.